The stock market is climbing day after day after day, but the breadth is getting a lot worse. Now, I've talked about in previous videos about the issues with market divergences, specifically when it comes to market breadth, that there's a lot more stocks overall that are going down than are going up right now. And how can that be? How can more stocks go down than go up, yet the stock market keeps putting in new all-time highs? And not only just like marginal all-time highs, I'm talking about impressive, big-time moves that are leading to significant new all-time highs. How does that happen? Well, you have three stocks in particular. That would be Apple, NVIDIA, and Microsoft. Those are your three biggest companies. They're all roughly about $3.2 trillion in size. To give you perspective, the entire German stock market is only 2.5 trillion in size. So each one of these companies are far bigger than the entire German stock market. 2.5 trillion versus three companies in the US stock market that are by themselves 3.2 trillion. So these three companies have enormous pull on the stock market. So all you really need are these three companies, and then single-handedly they pull up the S&P 500 and the NASDAQ 100. But it also leaves a lot of stocks behind. And that's what you're actually seeing here. You're seeing rotation to where in order to sustain these moves to where they're going up day after day after day, people are actually having to sell, and not just people, but hedge funds, pensions, Wall Street. They have to actually sell these other stocks in order to put the money into that. But because they're so big, it just manages to pull up the S&P 500 and the NASDAQ. But there is a problem coming up on the horizon, and that is the blackout period. So these companies, a lot of them are doing buybacks. And we just talked about how there's a lot of rotation out of everything else into Microsoft, Apple, and NVIDIA. But on the other hand, what's also helping to propel these stocks higher are their buybacks, specifically Microsoft and Apple, and most notably Apple, because you've seen over the last 5 days, the stock take a huge jump where we're almost adding over $400 billion of market cap to the stock. And one of the main drivers for that as well is their stock buyback program. The last quarterly earnings, they announced a $110 billion buyback. Last quarter, they bought back $27 billion of their stock alone. It's going to be really interesting to me at this next earnings report to see how much money that they spent on buying back their stock, because a huge part of this move that we saw right here was probably a result of their buybacks. Yes, they had a huge conference where they announced the AI being integrated with Siri. Yes, that was important, but a big part of it as well, this kind of volume had to also be driven by the buyback program. And it doesn't just do it by its own. The buyback will also create a sense of FOMO. So you have a perfect storm. You had the AI news announcement, which we know everything regarding AI causes a stock to rally. Then you had the buybacks that will also cause the stock to rally. And then on top of that, you have the FOMO effect that it creates, where people are seeing it move and they have to get a piece of that action. They feel like they don't have enough exposure to Apple, so they buy more of it as a result. And the same thing can be said about Microsoft, which has a $60 billion buyback program going on right now. But let's look at these stocks here and decide for ourselves, are these opportunities at this point? Do we want to be chasing these stocks? And I'll tell you right out of the gate, I do not want to chase these stocks at these price levels. Yes, they could still go much higher, but the ability to manage the reward and risk associated with these stocks becomes much more difficult because you're now entering into a blackout period for the buybacks. Now, you say, well, what does that have to do with stocks? Well, it has a lot to do with it, because as of last Friday, 50% of stocks entered their blackout period, meaning they can't buy back their stock right now. And usually that's about 4 to 6 weeks before they announce their earnings. 6 weeks from this upcoming Thursday will be when Apple is scheduled to announce their earnings. So there's a good chance that Apple will be going into blackout period later this week, which if you go back to April and you look at what happened to the stock market in April, we saw a significant decline unfold. In fact, NVIDIA, from its highs to its lows, dropped over 20%. Yes, it led to an incredible buying opportunity that sent the stock going from under $80 a share all the way up to $130 a share. But nonetheless, prior to its earnings, when you expect the buyback blackout period to begin, the stock struggled. Again, you go back to Apple. And even though with Apple, it had been struggling for most of the year, it also continued to struggle 6 weeks out from its earnings report. 6 weeks out on Microsoft, it also struggled. So if these stocks also struggle, what can you expect? You can expect the S&P 500 also to struggle. You can also expect the NASDAQ 100 to struggle as well, because there will be a lack of buying power that is entering into the market that was previously there. And going back to 2011, over 27% of the stock market's gains have been because of buybacks. And at one point, it reached as high as 40% of its gains. And right now, I don't know what the exact number is, but I wouldn't be surprised if we're looking at 40 to 50% of the stock market's gains being because of the buybacks. When you're looking at NVIDIA, yes, it's had an incredible run following its April lows. But where do you get in at this point if you haven't gone in already? There's really no ideal place to be getting in from an entry price standpoint. And so getting in at this level here, where we're trading at $131 a share, makes very little sense. In fact, you'd be much better off waiting for it to come back down to a retest of this 110 level. You might not think that's possible, but it is. When you start to get a pullback, you got to think about it from a rubber band. If you stretch that rubber band really far out and then you release it, what's it going to do? It's going to snap back really fast. And so that's what happens a lot of times when you get these big run-ups. They can see some significant sell-offs, sometimes even overnight. And so I'm not calling for a crash in NVIDIA or any of these stocks. What I'm trying to do is warn you to be cautious at these levels, to reconsider whether or not you think that this is a good time to be getting long on NVIDIA for the first time, or if you have no position, just getting long on it in general. Because the reward risk ratio, from what I can tell, would not be as favorable unless you can get a pullback first. The same thing goes for Apple. So looking at Apple, you could say that maybe there's some consolidation that's going on here over the last 3 days. I would be reluctant to say that just because I don't see that as what you would necessarily call consolidation. It looked like it dipped for one day and then it just resumed with its uptrend. We have seen all throughout this year and last year the stock struggle at times. And to assume that it can't struggle again would be to assume away a lot of risk. So after it's made one of these moves, is this the time to really be getting long on it? No. The time to have been getting long on Apple, assuming that you thought that there was this kind of a move that was likely to happen, would have been on this break here following last week's conference. And if you were able to make that move, kudos to you. However, at this level, I don't see the value from a reward risk standpoint of getting long on it. So what do I think can happen here? I think one of the big things that you may see in the coming days or weeks is the everything else rally. You see, when you look at RSP, and this is just the weekly chart of RSP, you'll see an index that really hasn't done much in 2024. It had that initial run higher into that April sell-off, but since then it hasn't done anything. And now RSP, for those who don't know, this is the equal weighting of SPY. It means all the companies are the same in terms of weighting, okay? Apple doesn't have a higher weighting than Home Depot, and Home Depot doesn't have a higher weighting than NVIDIA. It's all the same. But you look at SPY over the course of 2024, and it's been nothing but straight to the upside minus the sell-off in April. So RSP, somewhat flat on the year, somewhat flat for most of the year versus SPY, which has been shooting higher. What I think that there's a very good chance of is that you'll see a rotation out of the FANG stocks and back into all the other stocks that have really been lagging. Because when you look at the T2108 chart, and this is one of my favorite charts to look at when it comes to spotting divergences in the market, this is the percentage of stocks trading above their 40-day moving average. And right now, you're only looking at 32%. You have a stock market trading at all-time highs, yet you have 2/3 of stocks trading below their 40-day moving average. This is honestly one of the craziest divergences that I've seen since late 2021. So I do think that there's a good chance that you're going to have that everything else rally, or some people will call it the catch-up rally, where everything else is trying to catch up with the moves that have already been seen in Google and Meta and Apple and Microsoft and NVIDIA. Those stocks there, everything else will start catching up with those. That's a play that I think could end up paying well in the days and weeks ahead. If you enjoyed this video, I would encourage you to like and subscribe, hit that notification bell so that you can be notified when I make these new videos. I do them multiple times a week. And let me know down in the comments below, what is your main holding? What stock are you most optimistic on right now? Let me know down in the comments below. Thank you guys. God bless.